How's it going, everyone? It's Sam. I want to show you the end of ARK Invest's newest video. They just put it up. I've watched it all the way through, listened to the end a couple different times, and I want to hit on some really important stuff that Cathie Wood says about the market, whether it's this year, the next 10 years, 20 years. She talks about all that. She talks about what millennials will spend on, which includes crypto. It's one of the three things that she mentions. She talks about the Elon saga. She talks about how we are just getting into the start of a massive expansion and growth. And she talks about companies that will fail during this period. Now, whether you like Cathie Wood or not, she has had great returns. I am gonna play the videos for you, and then I'll break it down into three segments really. And I am going to put it a little bit faster than normal speed just because she does talk kind of slow. I listen to everything at 1.5 to 2 times speed, but we're gonna do 1.25 for everyone that doesn't like it that quick. But I'll be quiet. If you guys don't mind hitting the like button, I really appreciate that. And then also hit subscribe if you guys want. There's a link down there to Webull to get some free money. Just deposit $100 to get some free stocks. And there's a link down there to BlockFi to sign up. Just deposit some money and you can get up to $250 in Bitcoin. So let's get started here.
I remember a strategist at Merrill Lynch in the 80s, Stan Salviksen, did one very simple thing. He calculated the percent of consumption that baby boomers would account for in the 80s. And it looked like it was going to go up through the 80s and the 90s. And he concluded that, therefore, that this young workforce, as it evolved and gained more wealth, would be very good for stocks and would probably be it wouldn't be as beneficial for bonds, but it would be helpful for financial assets generally. Well, Tom Lee just did that same study, and what is he studying? He's studying the echo of the baby boom, of course. And so I started my career during those 20 years. I am a baby boomer, and I enjoyed that swoosh. I don't think anyone at the beginning of the 80s could have believed that would be possible. Well, Tom has done a similar study and has concluded, based on demographics, that the market won't peak until the number of millennials peak in 2038. And he believes that the equity markets should enjoy a 20% compound annual rate of return through 2028, so the next 7 years, lucky 7 years. Well, having watched how powerful that variable was in the 80s and 90s, against all expectations, there was a lot of bearishness in the 80s, and most of it was around inflation, interestingly. But he throws out some statistics. Millennials will account for more than 50% of spending during this period. From 2018 to 2028, they will account for 78% of children born, 44% of auto sales, and 40% of home sales. Now, we would argue that innovation is changing spending and that you can't use the same, you can't assume that this is going to play out exactly the same way this time around.
So that's the first of the three segments. We're gonna get into stocks and crypto here in a second, but I think that is important to take a look at. She cites someone that said that the market won't peak until 2038. So 17 years of growth ahead. At that point, they're expecting it to maybe level off a little bit. Now they're expecting a 20% compounded annual growth rate between now and 2028. Again, massive growth. And they expect millennials to be spending 50%, right? 50% of the overall spending is going to come from millennials. And in the next clip, she'll go over what they are actually spending on. Now, I will apologize. I'm trying my best to regulate the sound here, so hopefully it sounds okay. Let's move on to the next clip here, though.
The three areas where we believe millennials will spend, and I believe Fundstrat would agree with this, certainly stocks, yes, don't think innovation is going to change that so dramatically, except maybe houses without kitchens, so there will be much more in the way of food deliveries. But of course, this demographic is very interested in crypto as well. And this week, we learned that stablecoins had crossed $100 billion dollars, 20 billion of which is USDC, and that's up tenfold in just 1 year. We also got an update that DeFi now accounts for $67 billion, roughly $70 billion of the value locked on in Ether. So that also is up at least tenfold, probably more than that. NFTs, we're hearing a lot about that. So it seems like Ethereum is finding a lot of support. Certainly those three are built on top of Ethereum. Of course, Bitcoin is, which we still believe is the reserve currency of the crypto asset ecosystem. Understanding that stable coins could be giving it somewhat of a run for its money, but we also heard that, or saw through his tweets, that Elon is maybe not as high on Bitcoin as he once was. We don't know. We don't know if he sold what he put on the balance sheet as a diversification from cash. So we have seen a little bit of indigestion from all cryptos because of this. And yet when I look at where it is right now, it seems to be weathering well. This 30 to 40,000 range seems to be a good testing zone. Frankly, I feel better that we are in the midst of a correction and everyone's doing a reality check and trying to figure out, all the risks and the opportunities associated with the various cryptos. Dogecoin is amusing. Our analyst Yassin El-Mandra is going to be writing up some of his thoughts about why it will not become the reserve currency of the crypto asset ecosystem. And in fact, a lot of this is based around network effect and the security of the network, which is all important when it comes to transferring large sums of value. And so our confidence in Bitcoin has not diminished at all. Our confidence in looking at the Turkish lira in some of the emerging markets currencies is diminishing, and I think that will continue to be a very fertile area of growth, meaning the emerging markets, individuals diversifying into crypto assets.
So right there, sorry, I maybe blew out your eardrums there for a second. Right there, she talks about how there's 100 billion in stablecoin, 10x since last year. I love stablecoin. That's why I talk about BlockFi so much. We actually talked about it for a good amount on Money Morons today, which is the group of 4 people that we get on every Friday and make a live stream, talk about crypto and the stock market and stuff. And we were talking about how great stablecoin is with the 10% return you can get from it, because it is lower risk than a lot of other assets. Now, of course, always do your research, but I put most of my money for my house into stablecoin before I put my money down. So it's something that is quite attractive, hence why $100 billion is in it right now. She also talks about the Elon saga, saying that maybe he's less bullish overall, but they still think that Bitcoin is the reserve currency, except maybe stablecoin, which is giving it a run for its money. They call it Dogecoin amusing, and they're going to do a write-up on it. They don't think it's going to be the reserve currency, but again, it is amusing. They think that there are some security problems with it potentially. They still have confidence in Bitcoin overall, and their confidence did not go down. They think that millennials will continue to invest in crypto. Now let's get to the third and final point here, which is pretty bullish overall on the markets.
We think that our innovation platforms are not only in prime time, they are all these 14 technologies underlying the 5 major platforms: DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. They are moving into the sweet spots of S-curves. And the convergence between and among these technologies is going to cause some explosive growth, but is also going to cause what we call creative destruction. So the traditional world order is going to change fairly significantly, much more rapidly than we believe investors now anticipate. And we believe that the pricing power of in the old world order will diminish, especially because so many companies leveraged up to satisfy short-term oriented shareholder demands for their profits now and their dividends now, as opposed to sacrificing short-term profitability to invest in innovation. So we couldn't be more excited about innovation first, but also thinking about how the equity market is powering through all of the risks that it has faced during the last year. I am becoming more optimistic that we're in a very strong bull market.
So overall, she says there's the S curve coming. We're just at the bottom of the S curve. She said this before. She thinks that all these different sectors are going to go into one. Kind of like when we've seen innovation in the past, things change very quickly around innovation points, right? When you talk about either the telephone or the computer, like a lot of stuff changes very quickly because it just opens up so many new things. Now, she talks about how it's going to destroy the companies that have, just wasted time, wasted money, either through dividends or through leverage to get earnings now, but not be able to innovate in the future. Now, she said this before. There is a good point to be made for it. I mean, that is one thing that you risk in a dividend company, right? That they are not growing and that you are sacrificing the long term for the short term with the dividends, unless you reinvest those dividends. But even then, you could still be taken advantage of if the company is not able to grow as quickly and then a competitor beats it out on something because of the fact that they're reinvesting in their products and their company. Now, overall, I think this was just reiteration a little bit for what she said in the past, but she does give some good points on what she thinks millennials will be spending on the growth of the market going till 2038, and that she still thinks that Bitcoin is the reserve currency, among some other things that she hit on. Now, overall, I want to hear what you guys think about this. I think that this was a good interview or a good video, but I want to hear your thoughts down in the comments. Thank you guys so much for checking out the links down below to Webull and over on BlockFi too. If you want that free money, definitely check it out. Also, there's a link down there to Patreon in case you want daily updates when the market opens and when it closes, seeing what's happening in the market, what's happening with some of the high-flying or low-flying stocks of the day, at least the ones I'm invested in. And you can see exactly what I'm buying and selling and talk to 2,400 other people that are in there. You guys can check that out down in the description down below too. Thank you guys so much for watching. I appreciate it. And wish me luck. We are moving in this weekend to our new house. We bought it 3 months ago. Very excited. So I have some videos filmed for the weekend, but overall, not as many videos coming out as normal. If you guys don't mind, just wishing me good luck on that. I appreciate it. Thanks.